Good afternoon, everyone. Welcome to what is a successful credit union webinar. We have a panel of experts from the credit union industry who will help us with the discussion. My name is George Kodia, and I'm the coordinator for today's event. Before we get started, we have a few administrative announcements. If you cannot hear me, adjust your computer volume as needed. Allow pop-ups. Use the Q&A feature on the right-hand side of your console window to send us any questions you may have. In approximately 1 week, a closed captioned archive will be available in our learning management system. We have an NCU disclaimer that I must read for you. The materials presented in this webinar are intended as an informative and educational summary of general information on what makes a successful credit union. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that's available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice, nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade, name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the NCUA. Today's agenda, we will start with introductory remarks by Catherine Baxter, the training coordinator at NCUA's Office of Credit Union Resources and Expansion. I'll introduce our speakers and we'll put up a couple of polling questions, and then our panel discussion will begin. Catherine, the floor is yours.
Thank you so much, George. I appreciate it. And welcome, everyone. Thank you for joining us today for an exciting and stimulating topic on credit union success. Now, if you were asked what makes a successful credit union, how would you answer that? Is success solely in the eye of the beholder, or can it be qualified, quantified, or measured? Well, as credit union professionals, how might you grade yourselves when it comes to attracting and retaining members, planning for success, tailoring your products and services to fit your members' needs, and recognizing the needs of underserved communities? How would you grade yourselves on that? Our panel of experts is from the credit union community and the NCUA. And so they're going to dive into these questions and help us explore them more in depth. So listen well, take notes, and please ask questions throughout the webinar. Don't wait until the end. We know that you're going to find the discussion engaging and thought-provoking. And in closing, I just want to remind the audience that the mission of this office that's running this webinar, NCUA's Office of Credit Union Resources and Expansion, is to support credit union growth and development and to support low-income, minority, and any credit union seeking assistance with chartering, charter conversions, bylaw amendments, field of membership expansion, requests, and low-income designations. So it's our hope that this webinar will aid in fulfilling that mission some more. So without further ado, I'm going to throw the ball back into George's court. And again, we thank you. Please enjoy the webinar.
Thank you, Catherine. Today, we have NCUA's program analyst from the Office of Credit Union Resources and Expansion. We have Geraldo Meza, who's going to be our moderator for today's event. We have Brian McDonough, Supervisory Examiner from the Eastern Region. We have Teri Robinson, CEO of Ironworkers USA Federal Credit Union. Randy Chambers, President of Self-Help Credit Union, and Jay Williamson, President and CEO of American South Credit Union. Well, Franz, could you put up our poll so that we can ask our audience a couple of polling questions? Hello?
I have the polls up, George.
Oh, you have it up?
Yep.
Okay, thanks. All right, so we have 10 seconds to answer the first polling question.
I don't think we can see the polling questions, though,
Yeah.
Franz.
It's up on my screen. People are answering it.
Okay.
It's not here on the back, though, so.
Yeah.
All right.
All right, our 10 seconds is up. Could you put up the second polling? All right, now it's showing. I see we have a few from all the varying asset ranges. Thank you for answering the polling. Can we have the second poll up, please?
Give me a second.
All right. Where did you initially hear about the webinar for today? Was it recommended by a coworker? Did you see it on the NCUA website or from another source? Thank you. 10 seconds, please. Thank you for your responses. I'm going to share my screen again. All right. With that, I will hand over to Geraldo, who will be our panel moderator for today. Geraldo, the floor is yours.
Thank you, George. Again, my name is Gerardo Mesa. I'm with CURE, program analyst. I will be asking our panelists a series of questions on governance, management planning, and execution as it correlates to success. Each panelist will have an opportunity to respond. So without further ado, let's begin. Organizational success, like personal success and achievement, comes in many flavors, shapes, and sizes. One organization's definition of success is often very different from another organization. Randy, as a credit union, what does it mean to be successful and how do you measure success?
Thanks, Gerardo. That's a pretty important question given the topic today. So we think of self-help and our credit union as a bicycle, really where the front wheel is our mission and our members. It guides us, it gives us direction, and it gives us clarity. And yet the back wheel is our financial strength. If you ride a bicycle, you know that you get the power from that back wheel so that if you can drive it forward, you then can get to the places that the front wheel is guiding you to. For us, we're a low-income designated credit union, a minority credit union, which means the majority of our members are non-white, and we're a CDFI certified credit union. So we particularly think about success in how do we serve that mission of serving low-income people, of serving people of color, and of serving a primary purpose of community development. So we think about, how many loans do we make to first-time homebuyers, people who've traditionally left out by society? How many people do we help improve their FICO score? How many Black and Latino families become a homeowner or start a business because they got a loan from self-help? One of the things we think about is that really what is the purpose of a credit union? And we believe if we don't deliver something of value back to our community and to our members, that we don't really have a reason for being. That being a credit union that recruits most of its members through car dealerships that refer folks to you for loans, or that is reaching into the mass middle class, we don't feel like is consistent enough with what we're trying to do in terms of really being a credit union that serves the underserved. So for us, we think about how those measures of success of serving the target communities. At the same time, I reference the back wheel. And so I don't say this simply because NCUA examiners are present, but is to recognize that there is real risk in the business of taking in savings and lending that money back out. So we look and say, do we have adequate net worth? Are we above? For us, we want to be above 10%, not above 7%, because we know that the communities we serve are impacted really hard when there's a recession or a crisis. So we want to have a little bigger cushion than we're required to. And do we have that 1% return on assets? If we feel like we've got those things, we can hold our examiners off and really serve that mission. So for us, that success is the people that we serve and how we serve them. But we also recognize that if we don't have financial sustainability, we can't deliver on that front wheel.
Well, great. Thank you, Randy. Jay, same question.
I have to agree with Randy and everything he said. One of the things for us, what I believe a successful credit union is a credit union that's making an impact in the lives of our members, and for us, our community, specifically financially related. How we measure, I really measure that is our membership growing? That lets me know that we're doing the right things, that we're reaching our communities, and they're putting value in us. And financial metrics, the same as what Randy said. I'm looking at, is our net income increasing? Is our ROA good? Is our loans going up? Net worth and net assets. Those are kind of just the tangible ways that we measure it. But we're always looking to make a difference in the lives of our members, and that's how I determine whether we're successful or not.
Thank you. Thank you. Teri, do you have anything to add?
Yeah, obviously very similar to Jay and to Randy. As far as what we measure here, our numbers, we watch those every month and report that to the staff. I keep them abreast to what our goals are, and we do a weekly progress report, a monthly progress report to the staff, so they know where we are towards reaching our goals. But really, for us, I have passionate team members that really take on our members' causes and our members' needs, and that is what defines success. Is each member that we help individually. We take pride in really sitting down and going back to the basics of what a credit union is about. We're here to loan money to members that are in need, and it might take a little bit of a story to write in your underwriting to help the member, but really that's what we're here to do. And ultimately, in the bottom line, that comes by referrals, and you can see by our financials what that's resulted in for our credit union.
Thank you, Teri. It definitely sounds like, just based on everyone's responses, that members and community is first approach, but also having the financial backing to support those communities. Thank you. Let's hear from Brian from the NCUA. Brian, what are some of the measures or characteristics that NCUA sees in a successful credit union?
Thank you. Thank you. Speaking as the regulator and the insurer, some of the measures NCUA uses to quantify a successful credit union are, broadly speaking, providing quality member service while maintaining a safe and sound financial and operational condition. And NCUA uses such metrics as net worth, earnings, asset quality, as well as membership growth, loan volume, etc., among many others. However, I think as we've heard, there is no single right answer, and the definition and metrics for success can be different for each credit union. So it would not be accurate to say that NCUA would measure a successful credit union solely using financial performance indicators. But what I can say is one characteristic, and there are many, of credit unions that are successful are ones that take a thoughtful approach to strategic decision making and consider not only the benefits but the risks, and also consider possible unintended consequences in their planning process. For example, prior to applying for a field of membership expansion or starting an indirect lending program or even a commercial lending program, there is nothing wrong with any of those things. But successful credit unions take the time to think them through, plan appropriately, and make sure they are ready before they move forward.
Thank you, Brian. Definitely not just about the ratios. Like it sounds like both from Brian's perspective and from the credit union industry. You really have to know, more about just what does that number mean. Thank you. Let's jump on our next question, which is regarding products and services. Randy, how have your products and services helped you serve your members while helping improve your financial posture? And what unique niche, if any, do you have that differs from your traditional products and services?
So I think one of the things to recognize is that even large credit unions and self-help at almost 40 years of age has become a relatively large credit union. We have about 200,000 members and close to 4 billion in assets. We're still a niche player in the marketplace of financial services. And that's even more true in the last 20 years as so much financial services has been disintermediated, where you get your car loan at the car dealer, when you get your mortgage online with Rocket Mortgage. And so we have to figure out what are the niches that even we as a large credit union plays. So our goal is to find niches that serve our mission and our members in ways that others don't serve them. So our roots, our earliest borrowers were single African-American mothers in the 1980s and 1990s. And if you're as old as I am, you remember that as a time when Ronald Reagan referred to single African-American mothers as welfare queens and said they were the problem with our society. And we took the different view. We took the view that single African-American mothers had the same interest that every other mother has, which is a safe place to raise her children, a roof over her head that she can call her own, a place she doesn't have to move every year so her kids can go to the same schools, so she can plant flowers in her garden and be close to work and know that that's going to be her garden. And so in those days, that was a niche because nobody else was working to serve that community. In the last 20 years, we've been a very active lender to immigrant communities who have been similarly demonized by so many people in our society. So what we try to think about is what are those niches that we can provide a service where others aren't competing for who we think are community residents and members who need our services, who want our services, and who we can serve. So that's really what we think about as we're designing products and services. It's not to go out into the red ocean where we're competing against 1,000 other people for the same member, but is how do we provide a service that is responsive to the need of our particular constituents, our members.
Thank you, Randy. Teri, the same question.
Yeah, I think very similar. We have, started out here as a credit union doing dispatch loans, and we still continue to do that type of product for our members who are getting dispatched out onto a job site. Our credit union started on a $2 loan to go to a job site. I still tell members that story about how our, members just needed gas to get to a job. They didn't have a job yet. So, sometimes when you are doing underwriting, it's the same thing when we do this loan now. We know that they're getting dispatched. We're going to help them get to that job site. That may require a night or two out of town. So our products and services are catered exactly for our members. And that's why they're brought to us by the unions to help their members get to work, where most people would turn around and say, well, you can't work. Same thing with when we do a loan, we're looking at how long have you been a member of the union, how many, it doesn't matter to us that you have 12 W-2s. To me, that means you're a hustler, you know how to go get work, because our members, when they erect a building or a project, then they're done with that project and they have to wait on unemployment until the next project comes up. Well, in that meantime, I know they're going to go to work, but how can we help them bridge that gap between when they're working and when they're not? And how do we help them qualify for a traditional loan without going to a predatory lender? A lot of our members get caught up in the predatory lending because they're a lot looser, I guess, at looking at things than us. So we try and, recapture those members that sometimes would get lost in not in the traditional market, and we go after those and help them and let them know we're here to help them. I know during COVID, we did a bridge loan during COVID that was very successful, realizing members were not going to have unemployment for probably 2 to 3 months. The jobs were shut down. We instantly implemented a product for the members that kind of helped bridge that gap. It's a $2,500 loan to make sure that they could get their house payments made and their car payments made. So those are kinds of the things that as a smaller institution, we're able to pivot and do very quickly, knowing it's in the right interest of our members.
Thank you, Terry. Jay, same question.
We serve primarily rural Arizona, and I think if I'm being honest, one of the things that we could do better is find products that better serve our members in niche areas. And we've got a couple that we're going to launch this year that I do think will help accomplish that. But one of the things, if we do something different, it's that because we're serving rural Arizona, we're serving a lot of small business and agriculture. We were able to, during the COVID, we were able to stand up PPP loans very quickly, and we spent a lot of time driving to multiple counties on different days and setting up and just offices so we could help the people that were underbanked and underserved, because a lot of the bigger banks, that's primarily who is in our market, are all the large too big to fails, and they weren't serving the small communities and small businesses, and we were able to do that. And I think that's one of the ways that we really prove to our counties that we serve and to our membership and communities that we made a difference when we're willing to do so in a time when others weren't, and they could see the value that we provided as a smaller credit union.
Thank you, Jay. All great answers. It really sounds like you really need to understand your members first to be able to figure out exactly what products and services they need. Ryan, what does NCUA recommend a credit union do prior to implementing a new product or service?
Well, NCUA would recommend that prior to implementing a new product or service, the credit union should determine what the associated costs are and how they may impact the credit union's earnings and capital, what risks are associated with the new product or service, and whether they be credit, IT, or even compliance related, and how they'll mitigate those risks. And if the credit union has expertise on staff to manage the new program, and if not, if a third party exists that can manage it for them, and what the cost would be, and then make sure they perform the appropriate due diligence on those vendors. It goes really back to the first question about planning and making sure that you're ready to go on new products or services. But I will say also, in my opinion, I encourage and facilitate mentor-mentee relationships between larger and smaller credit unions in the area that I serve. And I have found that credit unions are very willing to help one another, and all they have to do is be asked. So I would encourage credit unions to reach out to other credit unions that have successfully offered the product or service that they're considering, and ask them about their experience and for their advice on best practices.
Thank you, Barry. Sounds like you definitely have to do your due diligence, right? That's an essential part of introducing any new products and services, as well as conducting a cost-benefit analysis, kind of. All right, let's move on to our next question, which we'll add to this question. It's basically on building memberships. Randy, what are you doing to attract new members?
Yeah, so I think one way we think about new members is in terms of what are their interests and what are their needs. So we think of our members in some ways in three broad categories. One are savers, right? These are folks who are often, if they're individuals later in life, in many cases in our community, it's our churches and nonprofits who want to be depositing money with an institution that shares their values. So for them, we think about two things. One is, are we providing value as a saver, right? So a competitive dividend rate on their deposits. They feel like they're getting some return compared to the alternative investments. And two is that they're getting personal value out of what they do with us. So we talk about the lending that we do so that they can say, hey, my church wants to be invested in Self-Help Credit Union, or my wife and I want to have a deposit with Self-Help Credit Union. Now, it's true, we have lots of savers who are just there because it's a strong dividend rate, but we try to have a value proposition. Like most credit unions, our savings come from less than 20% of our members account for more than 80% of our savings. And so we think about that as a segment. The second segment is our borrowers. Again, most credit unions, if you have 30% of your members borrowing, you're actually doing quite well. So again, it's a little bit of a niche for us. So when we think about people who are in the borrowing stage of life, can we be responsive to their need? That often means low down payment on a mortgage or a car loan, because you're not a saver. You're 30 years old with a new family, and you got to pay for diapers and daycare. or you might only have one income in the household. So we try to think about, do we have a product that will attract people who are in the borrowing stage of life who can't get that service? Jay, I loved you talking about the too big to fails not serving the folks that our credit union serves. So who in that community is looking to borrow money who can't normally get money from a mainstream financial institution? And then there's the big middle, right? There's members who are basically transactors. They keep relatively small balances in their account, and they're not necessarily borrowing. So for them, it's really important that we provide really good service, that we're convenient, and that we're reliable. And for us, one of the ways we do that is by trying to have as little fees as possible. We don't do any courtesy pay overdraft. We don't do any NSF. So you know that if you're banking with self-help, you know that your money is going to, what you put in is what you're going to get out, that you're not going to have fees eating into that. And then finally, you got to think about, where can we find those folks, all three of those folks. So we take branch location really, really seriously. Can we locate a branch that is near folks who've got deposits who will want to save with us, and yet is proximate to the communities where our borrowers are, and is accessible to our members? So is it on a major road, at a major intersection, off a highway, so that members can get to us? We can't be on every street corner like Chase or Bank of America. So finding a strategic location that meets the needs of those members and potential members is a really key important part for us.
Thank you, Randy. Jay, same question.
Man, it's tough following Randy. He always has great answers. I'd say anything and everything. And that's a broad term, but we always try to do something new every year that we haven't done before. This year, we're trying to figure out how we can leverage social media influencers and advertise in some places that we've never done before. Looking at advertising through podcasts. I know everybody joined this because they wanted some type of real nugget. And I'll say geofencing has worked very, very well for us. We've geofenced several different places, and that typically will bring in from 1 to 5 new members every month. It's a kind of set it and forget it type of program, and it's very cost effective. So that's one tip that I can give out to everybody that's been very successful for us. But I'd say don't be afraid to try new things. Go out there and see what you can do. Fail forward, fail fast, and find out what really works for your particular market. And be willing to spend a little bit of time and a little bit of money in new places that you haven't done before, so that you can be relevant to your members and find something that you haven't found before.
Thank you, Jay. And Teri, what is Ironworkers doing to attract new members?
This is a loaded question for us. You know, when I started here, we were in 5 states. We had our charter with Oregon, Washington, Idaho, Alaska, and Montana. And in 2018, we changed our charter to a nationwide charter, and which was through an associational common bond. And we were 26 million at that time, and we had grand plans to help any union iron worker throughout the United States. And I had examiners question me on how are you going to be able to do this. And through the CURE department, I worked with them to help us understand, you know, what is this going to look like for us in a couple of years? How are we going to impact these members across the country? Fast forward to 2019, 2020, what we started to see was over 50% of our membership started coming from from Texas, Florida, Utah, New York. Our membership is actually growing faster nationwide than it is here. And you'd ask yourself, okay, well, how can they do that? They're a tiny little credit union out of Portland, Oregon, and Seattle and Spokane are our branches. And what it is that model that we had with those 5 states, we were easily able to implement into all of the states. I wasn't in shared branching. I didn't have ATM locations everywhere. But what it really told me was our members, word of mouth and social media, as Jay had mentioned, you know, using influencers. Well, our influencers are the ironworkers. In 2013, when we did the remote deposit capture, my members are in the job shacks. They're taking a picture of their check, and it's uploading into the credit union. Within seconds, they have their money. And the others in the job shack, you know, those little portable manufactured homes on a job site, all the guys in there going, what are you doing? And they said, I just did my banking. And so they helped us grow this credit union. And when I started, we had 5,500 members. We're almost at 13,000 members now. And it's all through the influence of our membership and how we have treated them. You can go out to our website very easily. I'm going to give some people some solutions here today of what they can implement in a small credit union or smaller credit unions, but they can go out, record some members, just go out back or in your parking lot of your credit union, record them, ask them for their permission to put it online, and really have your members tell your story. I can get up in front of a union meeting, 160 people, and talk, and I'll have some people come talk to me. But as soon as a union member or a person who's actually been served by us talks, that's what changes. Now we're at 93 million in assets as a credit union, and it's exploded. And we continue to get, we got 2,700 members from Boston in August this year. Most people would have thought I was crazy for taking that on, but I have the passionate staff here that goes, yeah, we got this. We can do this all over the country. So I think there's some easy things that people can do. Do Instagram, do Facebook, get your members to talk about you. We also do, it's a little bit different experience for our members who come in online. We do I know people have heard me talk about our boxes, but if you join the credit union through our online channel, it's a lot less expensive for us in theory. So we will reward you for that. We'll send you a box of, we have stickers that go on your hard hat, custom air fresheners, some little tchotchke stuff that says Ironworkers stuff on it. And people really, they'll put it on social media. They'll say, I don't bank anywhere that does this. Do you guys? And then it just regenerates other people to come to us. It's very inexpensive. Whatever it is for your credit union, you have to decide what can we do that represents us in the community. We did an online, you sign up for e-statements. You get a t-shirt. They're out there wearing on job sites on my t-shirt showing I'm a proud member of the Ironworkers Credit Union. That's not just me. That's any one of your credit unions out here in the community. They will wear your t-shirts and wear it proudly. Or if you are a community credit union and give a coffee cup to somebody, they're going to take it to work, put it on their desk, and advertise for you. Very inexpensive. If you need ways to market, I can help you. I'll stop there because I can keep going. I'm very passionate about this. I want to help all the credit unions out there that need some assistance because we're needed now more than ever.
Yeah. Thank you, Teri. It's really nice to hear about all these success stories. Everybody has their own unique way to attract new members, right? And it kind of sounds like you go back to really truly understanding your field of membership and exactly what they need and where they need it. Yeah. Now let's hear from Brian. Yes.
Geraldo, let me just jump in here quickly. I just want to remind our audience that they can submit their questions using the Q&A feature on the screen. Thank you.
Okay. So, Brian, how can a credit union change its charter or otherwise expand its field of membership?
Well, charter changes are submitted to the NCUA Office of Credit Union Resources and Expansion, or CURE, you folks who are hosting this webinar today. But just some information for multiple common bond credit unions, expanding the field of membership is relatively straightforward, as most groups can be added quickly through NCUA's online Capri system. However, if you don't qualify to use Capri, for example, if your credit union is not multiple common bond, or if your proposed group is 3,000 or more, you could submit the appropriate form directly to CURE. The process information and related forms, as well as direct contact information for CURE, can be found on the ncua.gov website under the Support Services section.
Thank you, Brian. And at the end of the webinar, we'll also have our contact information for the purposes of expanding your field of membership. Okay, so our next question is regarding serving the underserved. Randy, how do you balance risk and reward while serving the underserved low-income community, especially in circumstances where risk may be a little higher than your normal?
Yeah, in some ways for us, what I do is try and turn that question around, which is how do you balance the risk of serving only middle income folks? The last time I financed a car, I got it at 1.9%. And that's not a very profitable loan for the financial institution that made that loan to me. Their cost of doing business, if you take their cost of funds, and their cost of operations is greater than 1.9%. So we think it's okay to charge a rate that is, 2 or 3% above a paper loans in order to serve folks who don't get services from traditional financial institutions. I was involved over 20 years ago in organizing a credit union to serve Latino immigrants here in North Carolina. And almost to a person, every single one of them had gotten buy here, pay here financing when they bought a used car to get themselves to work. And in North Carolina, the legal maximum on a car loan was 30%. So what do you think their rates were? Typically 29.99%. So that credit union, which was a startup, so it had no income and it was very inefficient, right? It had 3 staff members and 1 small branch. It made car loans at 11.75%, which for you and me saying, I'd never take a car loan at 11.75%. But when the borrower was being taken advantage of by a buy here, pay here lender and had no credit history at 29.99%, that was a win-win proposition. The member saved 18% on their loan, and the credit union could book loans at 11.75% when its operating expenses as a percentage of assets was like 6 or 7% as this new credit union. As time has passed, that credit union's gotten bigger. And so now they're charging maybe 8% for a car loan to an immigrant family. But that's still a really good deal for the borrower. So I think in a world where we're constrained by a usury cap of 18%, there's actually lots of opportunities for us to serve underserved folks by charging a small amount more than an A paper loan to reflect the slightly higher risk. And I would even say more the higher cost of doing business. So the second thing we do is make sure that we're really engaged with our members, particularly our borrowers. So we have a pretty big loss mitigation staff, which is what some people call collections, who reach out to borrowers very early on and say, we're not here to take your house. We're not here to take your car. We're here to understand what's going on. You've lost your job because of COVID. We're going to put you in a forbearance. You've lost your job because of something else. We're probably going to put you in a 2 or 3 month forbearance, but then we're going to work with you to make sure you start making payments. So in some ways for us, it's not that our losses are greater, it's that the cost of serving members who are more likely to lose their jobs, who have less savings. All of us go through life's crises, right? All of us lose a spouse or a family member who contributes to the income. Many of us go through divorce, job loss, health crisis where we don't have health insurance. But the difference is that I have enough savings as a middle-class American to weather that without it impacting my credit report. And my wife is a public employee, she's a public educator, so we have really good insurance, right? So, but if you work on the margins where you don't have health insurance or there's only one income in the household, those things show up on your credit report. So for us, the bigger challenge with serving a working class community is that we've got to dig a little bit deeper to be there with our members, which means we charge a little bit more for doing that. But because we're serving folks for whom the alternative is a really high cost alternative, a finance company or buy here, pay here, back in the day, a subprime mortgage lender, we can charge a little bit more than an A paper and still cover the cost of doing that business.
Great. Thank you. Jay, same question.
Just to say something different than Randy, I think a big part of it is trust. One of my best offices is literally blocks from the wall of the Mexico line. And we're very active in those communities, and they know that we're going to provide value to them, and they put a lot of trust in us and we put a lot of trust back in them, and it's worked very, very well. I mean, we still have our charge-offs and delinquencies, but I think they know that we're there to help them and that we're giving back to the community, and we're showing up in ways that other places aren't. And that's caused a lot of good feelings and loyalty to our brand and to us as a credit union. So it's allowed us to do some things that maybe the other financial institutions won't, because they just looked at what the risk profile is of those particular people, what their ability to repay is. When if they really put their trust in in that society, in those communities, they'd see that they'd be rewarded for it. So that'd be my little bit of difference, because after that, it really comes down to a risk reward. You do in some circumstances have to compensate and charge a little bit higher rate for where there is risk, but you can do that. I mean, take a look at Teri's call report. I mean, she's doing a 2 ROA. She does a great job, and her credit union is profitable, so therefore she's able to serve her members and serve them very, very well. So it's certainly doable, and you've got a couple other great panelists that are showing that it is doable, it is profitable, and you can make a difference in people's lives.
Thank you, Jay. Teri, do you have? Anything to add?
Yeah, I think I go back in 2009, 10, 11, when the economy was crashing down around all of us. And, the people that couldn't pay, it was because they didn't have work. It wasn't because they didn't want to. And then fast forward to now, within the last couple of years, people were back working. They were able to start paying, and our recoveries were at record recoveries in the last few years. We pride ourselves in digging deeper. And if anyone out there isn't doing risk-based pricing on their lending, I would ask why. If you're sitting there at 28, 30, 40, 50% lent out, there's a whole bunch of members out there that are not borrowing from you for a reason, or you're not reaching them, and they're probably your C through E borrower. We do all the way down to E minus, F. I don't know what you want to call it, but a lot of times it's just sitting down, listening to the member, really looking at what's going on with their credit and doing a little analysis and putting people on a budget and holding them accountable for it. A lot of our members are one family income. They work 9 months out of the year on average, is what I tell them to budget for. They've never been in a budgeting class. It's our job to help the underserved, and it takes time. Our financials look a little bit different. Our model is a little different because our expenses are higher, but our rates are better. And it pays off in the long run. When in 2009, 10, 11, when the economy crashed, my A plus AB borrowers did not know what to do. They went and filed bankruptcy. They didn't know how to go get a job. I know my C, D, and E borrowers, they know how to hustle. They know how to go get a job. If they lose one today, they're going to have one Monday. That's how it works. So I don't ever worry about, my C, D, and E borrower. And I think more credit unions need to look at that. We dive into the ACH and share drafts, or the ACH and debit card transactions that come through. I'm looking for other predatory lenders that my members have loans with, and we go after those because we know they're at 24, 25%, and we bring them over to the credit union. Yes, am I going to get them in at 8.75 or 11%? Yes, but we do Performance Plus. You make your payment, you get to a different tier, and we'll lower your rate. So that's what we're here to do, and it does pay off. Thank you, Jay, for mentioning our ROA. We're very proud of what we've been able to do to help sustain our growth here at the credit union.
Thank you, Terry. Thank you, everybody. Yeah, it definitely sounds like finding alternative solutions to balancing risk reward and trust, right? And working with your members. Unfortunately, we're running out of time. So, Brian, just a quick thing. Is there any regulatory or other benefit to being classified as a low income?
Sure. There are an exception from the statutory cap on member business lending if you're classified as low income. There's eligibility for grants and low interest loans from the Community Development Revolving Loan Fund. There's the ability to accept non-member deposits from any source and the authority to obtain supplemental capital. But to qualify as a low-income credit union, the majority of the credit union's membership must meet certain low-income thresholds based on data from the Census Bureau and requirements outlined in NCUA's regulations. And while all federal credit unions can qualify for the low-income designation, some state-chartered credit unions may not be afforded all the designation's benefits. So if you're a state-chartered credit union, I would urge you to contact your state supervisory authority to see what the designation criteria is for your state.
Thank you so much, Brian. Thank you, Terry. Thank you, Jay and Randy. I learned a lot today about the meaning of success, but as well as how to serve your members. Unfortunately, we're running out of time, so the last question is going to have to wait. We'll go back with Ron. He will be asking the questions from our audience.
Great. Thank you so much, Geraldo. And I want to thank our speakers, Brian, Terry, Randy, and Jay, one more time for great answers, great information you've provided. We have many questions that have come in. I'm not sure we can get to all of them. There were some related to content that have been covered. Someone was asking, a couple of people asking, to go back over that. However, what I'd like to say is a recording, as I think George mentioned, a recording of this webinar will be on NCUA's Learning Management Service in about 2 weeks. So anything you missed, you can log into that. It's free to credit unions. The setting up an account is free and easy. And then you can go back and view this over. So I will skip those questions, but This one came in. I'm not sure who was talking at the time, but the question is, how important are community advisory boards? So I'll just throw that out to anyone who'd like to, like to answer it. You have had any experience with community advisory boards? Okay, awesome. All right, next question. And actually, Randy, you mentioned niche products. So I'm going to throw this at you first, but I think it's a question that, Brian, you might want to weigh in on, or anyone else. And the question is, over the last few years, it appears member count and total assets are heading down for almost all peer groups except for 6. Is finding those niche products enough to keep smaller credit unions going? Is there anything else that can help smaller credit unions grow?
My personal view is that if you don't serve a niche that is large enough, that it's hard to survive as a small credit union. And again, it doesn't have to be a niche of existing members, but it has to be a niche that draws people in. We started, I guess, started a small credit union. When I got to self-help, we had about $35 million in assets, and now we're at about close to $4 billion. So it's certainly doable. I think it's a lot harder today, but I bet you Teri's itching to say something.
Go ahead, Teri.
Well, I think, it's just, again, knowing your niche, knowing your membership, what they need, maybe do some polling of your members, asking, sit out in your lobby if you're not a CEO that's out there with your membership, hold some, forums where you can have one-on-one conversations of what are we missing? Every member that drives up, why aren't you getting their car loan? It should be with you. We're here to loan members money. They're getting loans elsewhere. So I would try and dig down into what are your members doing? Look at some of the data that's in your data processor, your shared drafts and ACH and debit card stuff. That's all right at your fingertips, and you can see where are our members going. One of the things we had was, 616 checking accounts when I started, and now we're at almost 6,000 checking accounts. That's a lot of data now we have on our members that we can dig in. These are all inexpensive ways that you have to kind of reach out to your membership and look and see where are they going, what are we missing, and what can we do inexpensively. Do e-blast, reach out to your membership, and it's very inexpensive to get your email addresses from your members and then poll them and ask them what they're looking for in a financial institution. If you have 2,500 members, why do they belong to you? You need to be asking yourself that. What can we do to help these 2,500 people, and we only have 500 of them borrowing? There's a disconnect there that you've missed something, and I would ask yourself, what can we do better for our members? They deserve it, and we deserve it as employees of the credit union. We're here to help.
Great, thank you both. Thank you, Teri. Brian, did you want to add anything?
No, I think both Teri and Randy covered it very well. It's just, I think, understanding your field of membership and taking a good look at are you doing everything that you can to serve those members and what the future looks like.
Great, thank you.
Ron, I have a question here that I want to throw out there, if you don't mind.
Go ahead, please.
Okay. All right, this goes to anybody on the panel. How important is it to work with your district examiner, and how do you build a good relationship with them?
I'll take that if you don't mind. I went through a cease and desist and an MOU in my career, and I will say that has changed how I run an organization. But having that relationship and seeing how we could leverage what the examiners look at is critical. I mean, I love it when the examiners come in, because they're going to look at something and they're going to look at my organization way different than I do. That's their job, and they're very, very good at it. So there's always ways that they can help me to make a better organization. And that, of all the examiners that I've had and having gone through those situations, I have found most of the examiners do want to help. Sometimes it feels like there's an adversarial role there, but I think we cause that a lot of the times. And if we don't, and if we look at it as an opportunity and we look at that it's a collaboration and they can help us, that comes through. And since that time of going through those two really bad situations, I've had great relationships with all my examiners, and I value what they have to say, and it's been a very good relationship. So I think having that is absolutely critical.
Thank you, Jay.
I would only add one other thing that, I mean, the question feels like a setup a little bit, Gerardo, right? We're on an NCUA webinar, but, you know, I think I would just echo what Jay said, which is transparency. We actually do, for about the last 15 years, we've started every exam with an entrance conference, you know, usually a tip and exit conference, where we're presenting to the examiners. Here are the things we've done differently in the last year that you might not have seen in our board minutes, or maybe you did see in our board minutes. Here's some risks that we have become aware of, you know, increasing delinquencies in a part of our portfolio. So we try to be really transparent with the examiners so that they see what's going on in the credit union, because we don't want them ever to be surprised and try and shut something down. And what we say is we'll do almost anything you ask us to do as long as you don't constrain our ability to serve our members. So if you ask us to improve our BSA practices, within reason, we're going to do that. If you ask us to improve the documentation in our loan files, within reason, we're going to do that. But if you tell us you're taking too much risk by serving low-income folks and folks of color, we're going to go to the mat with them. And so we try to be really transparent about who we are and what we're doing day to day, so that it starts out in a position where we're not hiding something from our examiners.
I agree with the same thing. We were in a net worth restoration when I came. We had a letter of understanding, and much like Randy mentioned, you know, credit quality was a question that the examiners had, and it required working with the examiners so they could understand, and documenting a little bit more so they could understand why, who we loan to, and that it's an okay risk. And open communication, sharing your plans, sharing your, you know, your board information with the examiner so they know. If you have a question, reach out to an examiner. I feel like we're all here doing the right thing. We want to do the right thing, and we don't want to be doing something wrong. But if an examiner is telling us something, we feel like, I did it wrong, I'm in trouble. And that's not really what their intent is. And our intent is not to do anything wrong. We want to follow the rules. Just tell us what the rules are. That's how we want to operate as credit unions. We get scared. We almost get paralyzed because we're afraid to do anything wrong. Well, reach out to your examiner and ask them, is this okay? Do you have any other credit unions you would refer me to that are doing this, that it works at? Just have an open partnership with the NCUA.
Thank you.
Very good. Thank you. All right, we'll go to another question then. I think we might have time for just one more. I really like this one. It's probably our last question, and it's for all the panelists. And I think this topic is important when we're talking about success. Actually, success is part of the statement. But the question is, what are your thoughts on successful succession planning for the CEO position at small credit unions in particular? We've had some mergers in small credit unions because there wasn't a candidate for this critical position. So I would love to hear the panelists' thoughts on succession planning, and if we have time, Brian's thoughts. I think this is a good question, good point.
I'll take this one. I'll take the first bite out of this. Okay. There's a lot of educational opportunities out there that we have as credit unions to put our staff through, which is, you know, the Kingdom Management schools, the Q's schools. There's lots of resources out there. Just on the other side, we have an opportunity to reach out to those schools and ask, are there people in the program that would be interested in partnering with us to be in a succession plan at our credit union? Work with other local credit unions and try not to be setting your credit union up for a merger. We all started 50, 60, 80, 90, 100 years ago. And why? Because we were needed. And we have to remember that when we're leaving, that we got to leave the credit union in the same condition it was when we came try and find people out there. They're out there. They're going to these schools and getting educated to be able to take over our credit unions or be in management in our credit unions. Start reaching out and getting some of those younger people involved in your credit union.
Thank you, Terry. Anyone else? Next, Jay, you want to take a stab at it?
Yeah, to me, that's part of my job description, and it's one of the most important jobs. I'm a big risk taker in my life. I love to ride motorcycles, and I know that I could go at any point in time. So everywhere I have been, I've made sure that I had somebody else that I'm training and working with all the time that can take over and be the succession if I'm not there for whatever reason. And I work with all of my team to make sure that they're all involved in the organization, know what we're doing, why we're doing it, how we're doing it, so that there is a clear line and to make sure that somebody can step in. But I just see, to me as a CEO, that's my job to make sure that this organization survives long after me. So I'm constantly investing in people. And I saw in the chat that somebody said, would one of us be willing to mentor? I promise you, people have invested a lot of time in me. I'm happy to do the same. So I definitely help mentor anybody that wants my input. I'll be happy to help.
Thank you, Jay. Very good. Randy, your turn.
So I'm only going to add one quick thing, which is I think that, Jay, in particular, your comment about your own staff, that the character of our credit unions is often very unique. And I think particularly Terry and Jay, your credit unions, have a unique character and history and membership to them. So I think really one of the key challenges is to make sure that we do identify someone internally, because it's really hard to, I think, teach the culture of a credit union to someone who's coming in from the outside. Not the culture of credit unions, but the culture of Ironworkers, the culture of American Southwest, how you serve your members, who your members are. So I really like that, particularly Jay, your point about investing in your own staff, because I think one of the challenges even big credit unions face is often the temptation to go outside for fresh ideas, which you need fresh ideas in the body, but I think the head needs to have clarity that it is part of the institution's history.
Thank you, Randy. Sorry, Brian, we won't get a chance to hear your response. We just ran out of time, but I think the three answers we just got wrap things up nicely. I want to thank everyone again, and I will turn it over to my colleague, George.
Thank you, Ron. Thank you, Geraldo, Brian, Terry, Randy, and Jay for the wonderful presentation. Thank you, Ron, for monitoring and facilitating our Q&A. And thank you, Franz, our IT support person. Our final thanks go to our audience for attending today's webinar. Our next webinar is on May on February 22nd. Our office contact information is up on your screen. And please don't forget to complete our short survey, which follows immediately after. Have a good rest of your day and have a good afternoon. Thank you.